Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Mackintosh, Economist at Nasdaq, for an update on the latest COVID-19. The U.S. and global economies are digesting the progress of reopening the economy. And Phil, stocks opened higher despite over 10 million COVID-19 cases, 500 deaths globally now, on the space of less than 6 months. So the question is, do you think the market priced increase of the COVID-19 cases from last week?
Yeah, I mean, that's a really good question. And it's not just the fact that we've passed 10 million cases or we've passed 500,000 deaths. It's the fact that in the US in particular, we've seen a massive increase in cases. On the chart, it actually looks like we're seeing a second wave. In reality, it's like we talked about last week. It's kind of an acceleration of the slow burn we saw from some of the southern states. But they're now seeing caseloads that are kind of comparable to what New York City saw in its early days. And we've seen nearly 50,000 cases in America, which is way above the old averages we were seeing sort of in the 30,000 range. So we have a problem in America. A lot of the hospitals in the southern states are at stressed levels. It sounds like masks for hospital professionals are becoming in short supply again. We've been here before, and it sounds from what we're reading like we're already starting to see some reversals of the economic openings, which isn't unexpected. Even if the governors and the mayors didn't reverse openings, we've seen from the data in Europe that once the risk of contagion goes up, consumer spending and consumer patterns change significantly anyway. But this looks like something that we really need to get under control. The Congress is talking about mask wearing, which is good, because if we look at the difference between the experiences in the southern US states and the experiences in some of the old hotspots like France and Italy, you can really see that their adherence to mask wearing as the cases came down have allowed them to get back to work without causing new spikes. Because most of the things they're doing are the same as us. Their restaurants have opened, their factories have opened, they're all back out in the streets, relatively the same as us. The difference looks to me like it's mostly things like mask wearing and just being socially distanced and responsible. That's made it much safer in Europe to get back to full capacity. And even then, we can still see some of the behavioral patterns in Europe aren't back to full capacity. Public transport in particular and flights are still well below capacity. So the question with all that going on, that sounds really negative, is why is the market up today? And in reality, the market was up a little bit pre-open anyway. It looks like maybe all of the news about COVID cases was being built in last week, though. So we saw from the highs to the lows about a 5% drawdown last week. And, the stock markets are pretty good at knowing where the data's going to head. We saw a lot of the data coming out last week that was pointing to an increase in coronavirus cases in those southern states, probably getting back to record levels. And now we've seen that. It looks like the market was probably right. So today's reaction and the sort of positive open that we've seen looks like it's based on some of the harder data coming through. And today in particular, we saw home sales, which have spiked a phenomenal 44%. But we've got to be careful with some of these percentages these days because the sales are still 5% lower compared to last year, but obviously a pretty strong rebound. And even that is something that we've talked about before. Home sales is one of those trends that seems to be going quite well, just because people are looking to move out of big cities and move away to socially distanced places. And a lot of the mortgage application data, a lot of the home search data that was coming out daily has been pointing to this kind of a surprise for a while. So maybe it's actually a surprise that it's still such a surprise that home sales have recovered as quickly as they have.
Yeah, and Phil, some of the fallout we're seeing from these places in the energy space, and when you see bankruptcy from a larger company like Chesapeake, that is quite concerning. This isn't like one of these smaller outliers within the space. This is a larger company.
Yeah, and that speaks to some of the things we talked about back in April when oil prices went negative on that expiry. Obviously, the supply-demand imbalance that was created when everybody stopped flying and everybody stopped driving and everybody socially distanced and stopped moving, created the oil price drop. It created an oversupply of oil. We've since seen that the oil supply has mostly moderated, but the way it's moderated, because prices have gone down, is a lot of the high yield sponsored fracking operations in the US are now running at a loss or running at levels which really aren't sustainable. And was bound to affect one company or another. It was priced into some of the high yield bonds early on. So it's not really surprising that we've seen the some sort of a flow through impact of this, especially now that we've been waiting 3 months to get back to work and starting to fly and spend some money on gasoline again. It's one of those sad things. We probably will see some corporate failures, and you just hope that at the end of the day, the economy can come back and still be competitive across multiple segments of industry groups.
Yes, I certainly hope so. Phil, thanks so much for joining us on Trade Talks as always.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.